Thank you, Miriam, and thank you everybody for joining us. Again, good morning or good afternoon, based on where you're located. And this is our Originate More series, where we really try to help all loan officers in the mortgage marketplace originate more loans, giving them a specific subject, some knowledge or information on said subject, maybe some ways to hunt for those loans, and at the end, of course, how we can help once you do find them. Again, I'm Jamie Gilso, joined by Jackie Weed, who oversees all of our third-party operations. Quick agenda. Briefly, we'll just touch on who we are as a company and what we do, and why you may want to partner with us. We give you some information on the expanding condo market, perhaps on who are these buyers, some tips on how to determine warrantability, and of course, how to find some of these loans, and perhaps we can help you fund them once you do. We'll also give you some examples of recently funded deals. We make a lot of common sense decisions here, particularly when it comes to condos. So quickly, who are we at American Heritage Lending? We are a nationwide full-service non-QM lender, established in 2008, headquartered in Irvine, California. Operations teams throughout the United States, so we can cover all time zones effectively. And to Miriam's point, we have a management group that has been involved in non-agency or non-QM lending for each over 3 decades. We are a lender that you can trust, which means a lot in general, but particularly in non-QM. You want to submit your non-QM loan to a company with confidence that you know can fund it. That is us. This is all we do. As a result, we do a fair amount of make sense decisions that I mentioned earlier, which can result in anywhere from 40 to 50% of our business each month being some kind of exception. So we're always glad to look at make sense loans. We're very comfortable with credit in general. I mentioned we are a nationwide lender. Just quickly, some of the differences for us, we do, of course, have a full suite of non-QM products. For example, bank statements with expense ratios as low as 20%. A variety of DSCR products, from a no ratio product all the way up to a high ratio, lower rate product. Some tidbits, we can go up to 85 LTV on a single family purchase. We can use a 1007 over the lease, believe it or not, when it's beneficial. So that's a really nice niche. We have a primary residence bridge loan, which most people do not. That's great for people who are moving up. Foreign nationals up to 75. Of course, as you'll see, condos and condotels. Variety of asset depletion products. We're one of the few non-QM lenders that will go over $3 million in loan size on an alt-doc program. And we've got a 1-year P&L. Here's our coverage map for broker business. You can see we basically have the country covered with the exception of the Dakotas currently. Anything with red means we have a full license, including TRID loans. So a few true non-QM lenders licensed in the state of Massachusetts with a full TRID license. The same can be said for Nevada. And we do offer business purpose loans in both Hawaii and New York. Why you may want to partner with us here at AHL? Again, we have a full suite of non-QM products. I mentioned make sense underwriting. We'll put some of that on display here with live examples of deals we funded recently. We've got probably one of the better portals in non-QM, and that's based on the feedback from you, our clients, both sales and processing. We offer multi-channel delivery options, including wholesale, correspondent, both non-delegated and delegated, as well as actually some table funding options, which you don't hear a lot these days. And we feel we have one of the best in-class non-QM turn times. So most of our deals are in and out under 30 days from registration to funding, which on the non-agency side is pretty strong, including TRID loans, of course. So let's touch on the condo market and just try to give you some knowledge and why you may want to hunt for this business and why it's a growing market or an expanding market. Let's start with affordability, which is, of course, one of the bigger talking points in mortgage lending these days. Not getting cheaper to build or buy your house. And of course, rates haven't dropped like many of us hope they may have this year so far. So from an affordability perspective, condos can be an attractive entry point for first-time home buyers. They just, in many markets, they can come in 30, 40, 50% or more less than your average single family. So again, you think of if you're there now, or I've been there in my life as a first-time home buyer, it's a little precarious, it's tight, you've got down payments, ratios, etc. So a condo can have a lot more affordability options for those folks. Of course, there's a convenience factor to condos, which many people enjoy. There's a lot of amenities. So for example, some of the basics are, you're not gonna mow your own lawn. You may have a nice parking garage. You may have a tennis court or a gym. I've seen some condos with parking services and in common theater areas, etc. If you get down into, say, parts of Florida, you'll see condos around golf courses, obviously, and places that have wonderful clubhouses, etc., for the residents to use. So again, condos can offer maybe a different lifestyle for people. And naturally, if you work in cities or close to cities, a couple things. Commuting can be a challenge. I've lived in Chicago and California, so 2 hours each way gets old pretty quickly. Whereas a condo downtown, or at least maybe where you could use public transportation, such as a train or a bus, might look a lot more appetizing to you, again, based on where you may live and work. And lastly, we know, and you're in the business, you know this, that there's still really a shortage in many markets, or most markets, of true single-family inventory, particularly in the entry-level side. So again, in some of those markets, a condo may be the best option. I live in the Northeast, in case my accent didn't give that away. There's not a lot of land left, so in plenty of markets, we build up when it comes to housing inventory. So there's some tidbits on condos, some of the benefits or reasons why you may hunt for this business and why it really is an expanding market. So who are buying these condos, and who should you be looking for as a retail originator or a loan officer? Well, I mentioned first-time home buyers. Again, affordability matters. So certainly those folks are in the market. Single borrowers, young professionals, 25 to 35-year-olds that might live or work in the city, who don't have a family yet and don't need a lot of space. Obviously, a condo can be appetizing. Investors, plenty of that business out there. And for the record, on condos, we go up to 90% investor concentration. But there's plenty of markets where investors just buy a lot of condos because they cash flow wonderfully for a lot of the reasons we've already covered in this presentation. Second home borrowers. I mean, go to Myrtle Beach in South Carolina. There's a lot of second home condo homeowners, as is Florida, and really anywhere up and down the eastern or western seaboards of the United States, right? Seasonality. I live again in the Northeast. A lot of people where I live will have a condo in Florida for a second home to get away from the snow. So a lot of opportunity there. Foreign national buyers buy a lot of condos, again, for these reasons that we're seeing. Low maintenance. I want to buy a property in the United States. I don't live here. Well, who's going to mow the lawn? Who's going to take care of some of those, standard property functions? So condos look pretty attractive to foreign national buyers. And lastly, of course, you have empty nesters, folks that have, raised kids, maybe retired, and they don't need a 4-bed, 2-bath colonial anymore. They want low maintenance, and so they're going to sell that house and buy a condo and play golf and play cards in the clubhouse on the weekends. So those are some of the buyers that you may look for or may come across when it comes to the condo market. And there, as you can see, plenty of them. There's plenty of categories, and with each there are plenty of people, of course. Securing condo financing, if you do condo loans now, can be a little difficult, particularly when it comes to warrantability, right? So stringent Fannie and Freddie guidelines or restrictions on condos can knock them out of warrantability. Things like litigation, deferred maintenance, etc., residency, occupancy, commercial influence. It's no secret now that some of the agency lenders have a very lengthy condo questionnaire to determine warrantability. That process, of course, can be time-consuming to say the least. It can create delays for you and your borrower. And in worst case, it may take a while just to come back and find out that condo is in fact non-warrantable. So the wait was for naught, which always makes the borrower less than pleased. So that's why you want to partner with a lender that specializes in non-warrantable condos. So you not only have a backup to your current pipeline, but help you, again, look for and originate more new business. We do believe we can help you with that. For the record, when it comes to warrantability, every month we probably take in at least a handful of condo deals towards month end that were a grade A paper borrower, probably full doc, high FICO, etc., occupancy, whatever it may be. And at the last minute, something came up where it was deemed non-warrantable. So it was still a great credit risk, still a great borrower, Certainly the borrower, the individual, had done nothing wrong. It's just a matter of the warrantability in terms of the eyes of some of the agency lenders. So we're glad to help with those, and we can close them pretty quick on those full packages. So determining warrantability, some of you are probably familiar with these attributes, but here's some more, or if you're not, of course, any litigation usually will make you non-warrantable. Occupancy levels, pardon me, over 50% can kick out warrantability. I won't read them all, but things like rec leases, we're seeing more of in Florida. Of course, land leases, which we're also seeing more of, particularly maybe in Nevada. Short-term rentals, condotel, obviously. So plenty of reasons here, and I think Miriam, I will touch on it later, but put a cheat sheet in the documents for you so you can grab some of these and use it as just a quick reference guide, if nothing else. So how can we help you find some of these? We've shown you that there's clearly a large market for condos, a large group of buyers for these condos, some of the issues they may face that can cause issues in getting financing. So how can we help you find some of these opportunities, for lack of a better term? Well, one way is you want to partner with some selling agents that are very active in condos to begin with. I always joke with the sales group here that you want to target the product to the market a bit. So, I have family in La Crosse, Wisconsin. It's a great area, but there's not a lot of condos there, so I may not go hunting for realtors there with non-warrantable condos. No offense to my family. So here we are. Here's an example. We basically were Googling, looking for top condo sellers, potentially non-warrantable areas. Came across this listing. So if I'm a retail loan officer, and I've worked with plenty very high producers, and these are some of the tricks that they would use or we would use. We're going to go right to that listing agent. I'm not going to pack up their name on them, but we're going to go to that listing agent in the phone provided. And we're going to call the listing agent and say that, hey, listen, this is a great listing here that you've got over on Kendale Lakes Circle in Miami. Looks like it might be non-warrantable. Do you have any trouble financing those? And do you need help with those, or are you running into issues with these? Or start the conversation with the realtor, right? This is sales. Do they specialize in condos? Of course, Miami, there's a good chance they may. You can in turn tell them some of the options you have, some of the great products you have for tougher to finance condo complexes. So now you're really hunting or targeting right at the source of the business that you're looking for. And we know that in this case, for example, in Miami, you probably could have plenty of second home folks. You could have plenty of foreign national borrowers. You could have plenty of investors where DSCR loans may be prevalent. So again, you as a retail loan officer would have a whole toolbox of options for this particular realtor to have a conversation about. Same thing here. I mean, this is a beautiful condotel, right? Miriam put some red boxes in here. So you've got Jill here listing this thing for coastal properties. And it says right here, hotel, motel, condominium. Well, this is now a converted Motel 6. No offense to Bob Audette. This is a beautiful $1.8 million purchase. I mean, look at the beach in front of this property. It's gorgeous, right? So again, if I'm a retail loan officer, I'm going to call Jill and introduce myself and say, great listing that you've got over in Clearwater. I see it's a $1.8 million condotel. Do you have trouble financing any of those? Condotels, there's not a lot of paper out there for that, right? There's no agency availability. There's no govy. And even many of the non-QM players won't mess around with condotels. So again, you're going to go straight to the source, and you have options for Jill, and maybe she does a ton of this business, and now you can strike a relationship and do more with her. So here's a couple of ways to just really go at the source of what you are trying to do, originate more loans. I think we all know that it goes from realtor to loan officer to account executive. So if we can help you get in there at that first level, we're glad to. Some other ways you can help source this business, of course, you can partner with builders. You can identify condo developers. They're everywhere in every market, even across Wisconsin. So there's national builders, some names that you're probably familiar with, Meritage, KB, Ryan, etc. Those folks, of course, are building throughout the country, include a lot of condos, both as a primary residence and vacation and investment property. There are a lot of regional home builders as well. So you can reach out to those folks. Some of these places have their own financing arms, but again, what they offer for financing is generally a conventional or traditional Fannie Freddie product, a govy product. They may not have the options that we're about to show you in terms of DSCR, bank statement type of income, or higher LTVs. So I'm sure, and again, at the end of the day, a condo developer needs to sell their units to get their money back and make their profit. So they have a keen interest in making sure that their potential buyers can be financed. You can contact these folks and again, offer some of these solutions that we're going to show to you. You can also think outside the box. Again, there's more and more non-warrantable condos in the US today. So you could actually, if you know of a local homeowners association tied to a condo, or if you have ties to HOAs or HOA groups, you could actually contact and speak to some of those HOAs and say, are you having, do you know if your complex is even warrantable or not? And are you having trouble getting financing? Are your own residents having maybe trouble refinancing their mortgage because of the warrantability issue? But it's a good conversation to have. And my guess is if you're a retail loan officer, not everybody's calling the HOAs looking for business. So you might not have as much competition in that channel. And of course, you can look for really opportunity zones within your own markets. So again, I'm outside of Boston. So we have a lot of colleges, 33 colleges and universities in Boston. That's great. 250,000 college kids. A lot of them are from outside the US. We see all the time, every year, where somebody's parents will buy a condo in the Boston market, and the student will stay in the condo, perhaps with one of the parents. So that's a unique opportunity zone. The same can be said for professionals. You've got pockets of Silicon Valley or San Fran where you might have tech professionals. In Boston, we have medical professionals. Again, these are maybe not applicable to all markets, but many markets do have opportunity zones that could be specific to condos, particularly non-warrantable opportunities, which is your opportunity to shine to the realtor. So again, we've given you some knowledge on condos, why it's a great market to go after, who's buying them, tried to give you some tips on how to look for new business. Once you find it, we can help you fund those loans. And these are also things to help you find those loans. So let's just start with how we do how well we do with non-warrantable condos and condotels. We go up to 75 LTV on non-warrantable condos, case by case to 80 with exceptions. We understand condos well, so we understand warrantability. We'll actually go up to 85 LTV on condotels. A couple caveats, that's for a second home or primary residence only. Well, we will go to 75 LTV on condotels on a DSCR loan. So we're probably one of the more prevalent condotel lenders in terms of LTVs. Again, these products cover all occupancy types, owner, second homes, and investment properties. We do condo loans up to $3 million. All doc types, full doc, alt doc, whether it's bank statement, 1099, P&L, etc., or the aforementioned DSCR, or of course, both purchase and refis. We do accept high-rise condos, and we do accept foreign nationals. And again, I'm going to bring up a couple scenarios in a minute that Jackie actually literally approved herself, and she can touch on them. But we understand the condo business well, as you'll see Jackie illustrate. And so we can look at certain things, and it's a common misnomer that a condo above a high-end hotel, such as a Four Seasons or Mandarin, people think automatically because it's above a hotel, that's a condotel. Well, in reality, it's a non-warrantable condo due to commercial square footage or ratios. And we understand that difference, and that gets you a little better rate or a little better LTV. So we have a lot of condo products. Your account executive will be happy to cover more of this with you, dive into some of these niche products, even give you some private label marketing resources so that you, the LO, can in turn pitch these products to your realtors and buyers. I'm going to pitch it over to Jackie now, just to go over a couple of, again, live scenarios, put on display the products we have and some of the common sense lending that we use when we see them. Jackie?
Thanks, Jamie. So today our guidelines call for a minimum square footage of 500. However, we see a lot of, especially the condotels that are less than 500. This particular example was 400 square feet, LTV of 70%. This was a full doc loan. Our philosophy on square footage is we really look for the property to have a place to rest, a place to bathe, a place to eat, and a place to have fun. And assuming all of that, we will absolutely make exceptions for minimum square footage, as you can see in this particular example. We try not to go below 400, maybe 350 for a really strong borrower. But we will make those exceptions.
Great. This was a pretty clean borrower too, so we'll take that. Here's another one.
So we're seeing a lot of insurance policies today on condos that have actual cash value coverage for the roof. This is kind of in response to the increased insurance premiums. And we can be okay with actual cash value for the roof, assuming that there are reserves in the HOA budget. And, depending on the life expectancy of the roof, how old is it? We have to factor in a depreciation when you're looking at actual cash value. But we will 100% take a look at those and make exceptions. The other area where we see exceptions often on the insurance policy is deductibles. So you could have a wind deductible that is 10% instead of 5%. Fannie won't allow that. We will allow that. Again, we look at the budget to see what kind of reserves are in there when we look to make exceptions like that, but we will make them.
Yeah, that's good stuff, Jackie. Thanks. And again, clearly you can see we understand condos here. We will review the docs ourselves if needed. If it's litigation, we'll review that ourselves if needed. Jackie's approved stuff on 10-unit complexes where we did number 3 or number 4 sale. So again, at that point, we understood the whole complex. We understood the package. So we're glad to review these with you, particularly if it helps get you in the door with one of your realtors. So a couple of great examples of just not some products, but some common sense lending. So in summary, again, we can see that the condo market, particularly including non-warrantable condos, is really thriving and very lucrative. If you go to many cities, you'll see plenty of cranes. Those are generally condos in some capacity. Securing financing for non-warrantable condos has become increasingly challenging. And more so, even becoming warrantable has become increasingly challenging based on some of the more rigorous condo questionnaire questions, for lack of a better term, that agency may be asking for. That's why partnering with an institution such as ourselves that really understands the complexities of the market, understands condos in general, and has a bevy of really niche-y products to help go after that business, it's important to have those partners. If you partner with us here at American Heritage, we certainly can help you grow your business and in the end originate more loans, which is really why we're all here, to try to get people into homes and keep originating them every month. So with that being said, I mentioned that Miriam had put some available resources here for you, and you will all get a copy of this, by the way, this whole presentation. But we've got a cheat sheet here of just some common things that make condos non-warrantable that you can use as a reference guide. Just a quick flyer highlighting just a few of our many strong condo programs. And lastly, a copy of our own condo questionnaire, which is also available on our webpage. Speaking of our webpage, here's some contact information. If you don't already have an account executive, please reach out. We'll get you in touch with somebody. Our webpage is there, ahlendtpo.com. It's very intuitive to our business. So there's plenty of support documents on there as well as a quick pricer. So with that being said, I will see if there's any questions or if people want to go ahead and ask any, we'll be glad to try and answer them for you today. Or if you like, we can go over scenarios for you.
Hi, Jamie. Thank you so much. We have a couple questions in the queue. The first one's coming from Maria Cuervo, and her question is, on your foreign nationals, are they all DSCR?
No. So we do allow for self-employed foreign national borrowers. We can use CPA letters to verify their self-employment and their income. So what we look for is the CPA to verify that the borrower is in fact self-employed, owns the business, and to provide the last 2 years' income from the business as well as year to date. And then we can use that income in qualifying the borrower. Or if they have the equivalent of a W-2 role in their country of residence, then we look for a letter from the employer that, again, identifies how long they've been with the company, their position, last 2 years' earnings, and year-to-date earnings, and we can use that as income as well. So we have options besides DSCR for foreign nationals.
Perfect. Thank you. Next question comes from Amir Sabedian, and he wants to know, what if the HOA is underinsured?
So depending on the type of property, if in fact the borrower obtains an HO6 policy on their own, and we can kind of combine that with the master policy, we can be okay with that. We have made exceptions for that where, you know, because of the cost of insurance today, and you see that as such a big expense in a HOA budget today, is the cost of insurance, and especially in some states like Florida and California. But if the borrower has an HO6 policy and, you know, we combine the coverage and we can make that work, we will. So we'll look at those on an individual basis as an exception.
Okay, I got a couple questions coming in. Maria Cuervo, she wants to know, do we allow Condotels full doc and DSCR?
Yes, we do.
Perfect, thank you. And David Krebs wants to know this. I am in Florida where there are a lot of condo buildings geared towards short-term rentals. Are other sources of income allowed other than the 1007?
So yes, for short-term rental, if there's a history of short-term rental, then we'll use a 12-month history, regardless of whether it's our borrower or if the borrower is purchasing that property and the seller has a 12-month history of short-term rental, and we can obtain that. Of course, we have options to get market rents from property managers on those properties, and we can use that income or of course, the short-term rental 1007. We do have some AMCs that actually do a phenomenal job on short-term rental income analysis, and we're happy to share that information too if you'd like, you know, some referrals to AMCs that really do a good job on that.
Thank you, Jackie. Elaine Barbary would like to know if we can do co-ops.
We do not do co-ops today. They're a little bit more challenging to put into a securitization, so we don't do those as of this moment anyway.
All right, thank you. Laura Mann wants to, would we also be able to get a copy of the presentation to discuss further with our loan officers and production managers to assist on communications with the team? Yes, Laura, we can definitely go ahead and send you a copy of the presentation via email.
And Laura, we're happy to hop on with you, you know, one of our account executives or myself, and talk through with your side, you know, whether it be production management, et cetera, if needed. So just let us know, please.
Perfect.
So one other thing I'd like to mention is we do have clients that are in the Florida area and have relationships with developers that are building condotels. You know, as Jamie mentioned before, we see Four Seasons, Ritz-Carlton, Hilton, Embassy Suites. So if in fact there's a new development, a major chain, we can approve the development. And so that kind of takes away that part of, you know, approving the condotel. And then this way, now you're just focusing primarily on the borrower. We still look for the condo questionnaire relative to that unit, but we'll approve the new development. And we've done that. So that kind of takes away that stressful part of it, right? When you have a new construction development.
Absolutely. All right, Rick Hazy has a question. Since Surfside, a lot of projects have not passed 40-year engineering inspections and imposed assessments on the occupants who cannot sell until the improvements have been completed. Is that an issue?
So depending on what the improvements are, if they're structural in nature, or, you know, sometimes we will see where it isn't really anything that affects the safety or the soundness of the development, but more the cosmetic nature. It's just dependent on the individual complex and what the issue is. So we can look at those and try to work with you on those for sure. And I can tell you that we've seen in some instances, there's a detached garage, as Jamie mentioned. Oftentimes you have covered parking in some of these complexes. And the detached garage has had some issues, but it hasn't affected the actual condo. So, you know, we were okay with that, right? It's just the garage. It doesn't have anything to do with the living area, and we made exceptions on those. So it's kind of a property by property, you know, exception that we'll look at for sure and try to help you with that.
Thank you, Jackie. We have a couple more questions and to keep rolling in. Lazaro Reina would like to know, can you provide a list of non-warrantable condo and condotel communities that you have already closed loans on? And would we require a condo questionnaire since you have already approved that community before?
So the condo questionnaires are typically relative to the particular unit. So we have made exceptions in the same complex to use, the same condo questionnaire, but we do prefer it by unit. As far as a list goes, that would be a little bit of an effort. So, we can look to see if we can query that. I'm just not certain it's something that we can do. I don't believe that our system does not capture the particular complex. It's just relative to each borrower.
Thank you, Jackie. And Colin Lacey question. Working Western Massachusetts college areas, can AHL make an exception for room rents that are above market rents on 2 to 4 unit properties that house multiple students with 12-month lease agreements?
We absolutely can. So we do look at those individually, and we do recognize that in the college towns, those units are typically rented by the room, and each bedroom may have a lock on the door. So we will 100% look at those. LTV comes into play on that type of property. So if we'd like to see 10% below the max LTV, not saying that we have to, but we'd like to, and certainly a strong borrower, but we will entertain those properties.
That's great. Thank you for that, Jackie. I currently don't have any more questions in the queue.
I want to touch quickly, if I could. These were great questions, and I think based on the way Jackie parried them quickly, you can see we're comfortable with condos. But let's talk about Florida real quick, because that's where we see a lot of challenges based on the homeowners insurance, premium, lack thereof. So Jackie mentioned that we will look at the examples where the deductible is 10% as opposed to 5%. So that's a great common theme we're seeing down there. Another one is on the actual cash value of the roof. Where we're seeing we can't get replacement cost on the roof. They're going to use the actual cash value. We are looking at those, but to Jackie's point earlier, they will be, case by case. We're going to look at the entire HOA and how are their reserves and how are their budget, and potentially are the reserves there to cover the shortfall between the ACV of the roof as opposed to replacement cost. So, and lastly, I think, Jackie, please, if I'm wrong, because I am often, let me know, but I think we've seen some stuff in Florida where we've had 4 or 5 different complexes get together and actually go self-insured. And again, in those cases, they had ample reserves and et cetera to meet any deductibles. So we're seeing a lot of pressure in Florida on condos due to insurance, and we think we're handling them fairly well, again, case by case based on the overall scenario.
I think one of the other things that we're starting to see a little bit more as well is where we may have 4 units, a 4-unit condo, right? So, and they may even be single family detached homes, but they now become a condominium complex. So we see homeowners kind of getting together, designating them as a condo, and that's to benefit their property tax rate. And so if it's 4 units or less, we don't require the same documentation as we do for, a larger condominium complex. And we are starting to see that a little bit more, which is pretty interesting. But I do believe it's, for the property tax purposes, honestly.
All right, we have a question. How do we price a loan with you?
So we've got a online pricing engine right on our webpage, ahlentpo.com. You do not need credentials for this, so you can go right there and you'll see a drop down under resources or quick links for pricing engine. And again, you can reach out to your account executive or either one of us right on this line. You'll see some information and we can help answer questions or talk through pricing with you.
Great. And then Maria's question came in. If the policy has a 10% or so deductible, must the condo reflect that they have sufficient reserves to cover that deductible?
Maybe, maybe not. So, depending on is it wind, is it flood, what is it? And where's the property? How many units are in the complex? It's not always that we require that they have sufficient reserves to cover the other 5%. I hope that makes sense.
Perfect. Thank you, she says. It made
You're
sense. All right, that's all we have for questions for now.
Thanks for everybody for joining. Appreciate your time. I would be doing my job if I didn't really mention, somebody asked about pricing. One other thing, it applies to condos and all of our products. We have a unique feature called stacking. You can actually finance your broker fee into the loan. So your borrower does not have to bring those funds to the table. So you can finance your broker fee into the loan, and there's no ramifications to pricing for that. So reach out and be glad to talk you through it.
Thank you so much, Jamie and Jackie. This was very informative. And everybody else, look out for our upcoming webinar in June. We'll send out the invitations in the next week or so. Have a great day, everyone.
Thank you.
Thanks.